Woo! The market today. Man, I am here to tell you guys I am officially for the first time in the red in my portfolio. I knew this would probably happen at some point, but I didn't know it would be today. But I'm okay with that, and I'm going to explain why. So before I get started in this video, we're going to be talking about my portfolio, what I recently did, some changes I made. I want to talk about the energy sector. Energy stocks have gone up massively over the last couple years. Is it time to sell? Is it time to take some profits? I'm going to cover that, and I did something regarding that with my portfolio. So before we get started, be sure to subscribe to my channel so you don't miss an episode. I'm very transparent, as you're going to see here in a minute. I'm trying to grow my wealth, my knowledge, and I think we can all do that together here on this channel. So let's get started. Let's talk about what happened today. We saw that the inflation rates came out higher than expected. It came out at 8.6. They were expecting, I think, an 8.4. Now, when I was reading last week that experts expected inflation to start downtrending, I kind of rolled my eyes because I don't see that happening anywhere. The gas prices keep going up. Food prices keep going up. I mean, every time I go to the grocery store, the same products that I buy week over week increase a few cents to $1 each time. It's crazy. So I couldn't possibly I didn't really agree with what the analysts were saying. And today when it came out, it kind of solidified like what we see in the real world reflected in today's numbers. So inflation is not going down. It's continuing to stay at all-time highs. So we haven't seen that trend yet where inflation starts to go on the downtrend, which is when I think the market's really going to become bullish. But right now, today, because of that, it got really bearish. There's a lot of fear in the market. A lot of people were selling. I mean, a lot of stocks went down pretty big. I think Meta went down close to 6, or was it Amazon went close down to 6%. A lot of the big tech was down near 5%. Other stocks were down more. But what this did to my portfolio, as I'm going to show you, is it finally put me in the red. So this is the first time I'm in this territory, and I think my portfolio has held up fairly well compared to a lot of others, as far as people who started investing in 2020, the year the pandemic hit. That's when I started investing. I know a lot of people have been in the red since early on this year, and mine just hit now about the 6-month mark. So I think that's contributed to me being well diversified in quality companies. So as we can see here, Amazon, I was up 7%, now I'm down 4%, so that dipped pretty heavily. Meta's dragging me down. 3M went down quite a bit. I think I was in the green not too long ago. We see VIXIS, my international ETF, down almost 5%. I was in the green not too long ago. Home Depot, the same thing. So a lot of these stocks have dropped. Even the ones in the green have gone down pretty healthily. So what I am wanting to show you guys is, even though I'm in the red today, I am not freaking out. In fact, I am excited because these are the times for us investors to make the most money. You can either choose to be let fear take over and stay out of the market, sell, not invest, or you could put on your confidence hat and be like, you know what, this is the time to invest when stocks are low, people are selling, because when it does turn around and you ride that nice stock market wave back up, you're going to do really well with your profits. So just be sure you do your research and stuff. I bought a lot of stocks today, and I'm going to tell you why, which leads me into talking about energy stocks. Now, energy is a sector that has done really well the last couple of years. You take different energy stocks or ETFs, they've done surprisingly well compared to any other really sector. I think they're the #1 sector for performance growth. And what I always like to kind of stumble with in my head is, when do you take profits? Well, if we look at my performance just a few days ago before I went into the red, I was kind of almost 4% up in the green. But if you look down towards the middle, the very bottom, I have an energy box and I have an ETF called FENY. Now, FENY was up since I started investing over 100%. It was almost 103% in the green. So this was a stock that did extremely well for me, and I made the decision to take some profits, and I utilized those today to buy stocks. And I'm going to tell you why, but I first want to go over a bullish thesis and a bearish thesis on why either to keep investing in energy or to maybe take those profits. And I think this is good to kind of weigh, and I'm going to tell you what I decided. Obviously, I took some profits, but I'm going to tell you kind of my strategy with that. So FENY is the ETF that I hold. As we see here, here's a chart, but you will see over a 6-year span, probably over a little over 6 years, this stock is still not in the green. But since between 2020 and 2021, it started going on an uptrend pretty massively. And it's almost back to all-time highs, in this ETF. So in this ETF, I wanted to show you the top 10 stocks that it's invested in. And it's weighed pretty heavily in the top 10. It makes up 65.8%, so that is a lot. And you'll see Exxon Mobile is 20% of this holding. Then we have Chevron, ConocoPhillips, and then many, many others to follow. And so I like to always invest in an ETF in a certain sector when I'm not that knowledgeable about it. And so this is one that I did, and it turned out to be a great investment for me. Unfortunately, I didn't invest a lot of money into it, but enough that it made some decent gains for me. So with energy, I want to first show you why this person, this analyst, talk about why he thinks you should maybe take some profits right now, and then we'll talk a little bit more after this video.
There is more money to be made, I will posit, by being contrarian and going against the grain than there is by going with the consensus. This is an against the grain call based on the charts. Explain, show and tell, will you?
Sure, Tyler. I mean, I think before we look at the charts, we know that all of the fundamentals would argue for much higher. Capacity is restrained. Summer driving season is here. EU banning 90% of Russian imports. COVID ending perhaps in China, lockdowns. But guess what? How come oil's only up a fraction from where it was 3 months ago? I mean, all of that news, you'd think we would have been up $10 a barrel or 20 or 30 yesterday. We're down from where we were 3 months ago. And so this is the question. How much was priced in that famous 6-session move? Crude went from $90 a barrel to 130 in 6 sessions, the last days of February, early days of March, when the invasion started. And we're here at 115 3 months later with much worse news. I think a lot was priced in, and I just don't see us going that much higher. Take a look at this chart that's on the screen. This is the S&P 500 energy sector. The stocks, as we know it, dominated, of course, by Exxon and Chevron, but we're at the top of a channel. You see the arrows. Does it have to fail where I've drawn those arrows? No, but that's the bet that I want to make. And then here's the real issue. It's relative performance, the sector to the market, one of the parts to the whole. If you look at the next chart, it's a ratio chart, and it's simply what a relative strength line is. It's dividing energy by the S&P. And so what we know is there are no drawings there are no annotations, but you can see how far above the 150-day moving average we are. The final chart depicts it. This current spread is higher actually than it was in the '08 peak. And so energy stocks went on to make new highs in 2014, but their relative performance peaked in '05. And this big move now, a lot's priced in on an intermediate basis. I think everyone's in, and it's right to take the road less traveled.
As we can see, his argument is everyone has kind of invested in energy at this point. We even see Warren Buffett investing in energy, which we're going to talk about a little bit later. But he says everyone's buying it, so it is kind of against the grain to sell it right now. And usually that's a sign when others are fearful of doing something. So they're holding on to those energy stocks, buying more. They're fearful of selling them. Maybe sometimes that's the thing to do, is do the opposite of what the mass population is doing. But he says that oil is only up a fraction compared to the price increases in the stock market. So oil itself reached a high in March, hasn't reached that high again, but yet energy stocks have gone up massively, as we saw on that chart with FENY. So that's one of his arguments is he thinks that these prices have gone up so much, so the future growth in oil, possibly the increases, are already baked in. And so that's why he thinks it's time to take some of that profit now. He also showed the S&P 500 energy sector chart, which shows that it's at the top of its channel, and usually when that happens, it starts to dip and fall afterwards. Now, we did see energy fall a little bit today. Of course, I'm not going to take that. I'm going to only take that with a grain of salt because the whole stock market dipped. But let's see what the next couple weeks do. That might be a good telling of if this guy is correct. So he showed that chart. He thinks it's probably going to drop now based on prior performance. He also showed a ratio chart, which shows that we're far above the 150-day average with oil stocks, energy stocks. And the spread is even higher than in 08, when 08 peaked before those energy stocks really went down. So basically, everyone's in energy right now, which might be a good time to get out of energy, right? Take some of those profits and lock them in, which I decided to do. And I'll go into exactly what I did and how much here in a minute. But let's now look at the opposite. Let's look at the bullish thesis as to why you should keep buying energy stocks and why they should continue to do well. So let's watch this video and then we'll talk more about it.
Joining us now is Dan Pickering, Chief Investment Officer at Pickering Energy Partners. Dan, welcome back. I mean, Saudi Arabia raising prices they set prices every month. They raise their price to Asian sellers. I mean, if China were to really reopen, stuttering, sort of sputtering fits and starts, if they just fully went reopen, what's that going to do to oil demand and oil prices?
Yeah, Brian, great question. So China's a 14 million barrel a day consumer. This shutdown's probably taken 1 million of those barrels off the market. You assume that some of that's already come back a little bit, but 1 million barrels a day adds to an already tight market. I think what they're trying to do is accelerate their economy. If that happens, we may look at $120 a barrel and say it's cheap. So clearly something to watch along with all of the other things in the oil markets these days.
What also hasn't kept up pace, Dan, is the price of some of the oil stocks. Let's take a look at the OIH, okay, which is an oil services ETF. Baker Hughes, Schlumberger, Halliburton, they loom large in this. The last time oil was at this level, the OIH was above $1,000 a share. It's had a good year, but it's still at 300. One of these appears to be grossly mispriced. Either oil's too high or the OIH is too low.
Brian, even if oil breaks by $20 a barrel, it feels to us that we're going to see energy stocks continue to work. Oil is signaling that these stocks are very, very cheap. And when you look at the macro dynamics, I mean, sure, oil may go from 120 to 100, but it's not going to go back to 60. And so with energy stocks like the OIH and the oilfield service area, these names are trading at, I think, very attractive multiples on any kind of forward-looking estimates. The upstream names are trading at 2 or 3 times cash flow. Energy remains too cheap. It's 5% of the S&P. For a part of the market that's now growing in importance. Energy security is a much bigger deal. And so the big fear has been the stocks have worked. They certainly have. They've been the best for the last couple of years, but they could be the best for the next couple of years as well.
So the big argument here is that China is still pretty much locked down. If it reopens and in a big way, that should send energy prices going even higher, which means to this guy that stocks can keep climbing. So he did mention the OIH versus the oil prices where it was at 1,000, but now it's only at 300. So he still sees a lot more room to grow. And he thinks that oil has been suppressed for years, which I do too. I think it did get suppressed. There's a huge push towards environmentally friendly stocks. Oil was the big bad thing in the market, and basically in any kind of situation that you talk about, oil was looked at very negatively. So, he thinks that they still look pretty cheap compared to the forward estimates. And he says that energy is only 5% of the S&P, yet it's growing outside of that. So he thinks the stock market, that sector, will eventually need to catch up too. So he thinks that it's been a great investment for the last 2 years and should be a great investment for the next 2 years as well. So kind of we're in the middle of the growth, according to him, with energy stocks. Now I want to touch base that Warren Buffett did buy huge 2 energy stocks, Oxy, the Occidental Petroleum Corporation, and Chevron. CVX is its ticker symbol, and OXY is the other ticker symbol. So he bought these despite them trading at multi-year highs, and that's usually opposite of what Warren Buffett does. He's a value investor, so he likes to buy when stocks are really devastated and down in the dumps. But oil's gone up, as we saw, and he just started buying this year pretty heavily. So I think he sees a lot of upside potential with oil. He thinks the markets are undersupplied and will remain that way for years. So that means demand stays high, right? So due to years of underinvestment amid the ESG boom, which stands for environmental, social, and governance. Now, if you don't know about ESG, you need to research it. Maybe I can do a video on it. But this is something that investors weigh heavily in their analysis before they buy stock. So he thinks maybe that this was kind of overdone and people aren't going to really focus on that maybe as heavily going forward. I think they will, because in the business world, it is a growing part of reporting. You want to always put an ESG component in reports that you send off to rating agencies or regulatory bodies. So ESG has been a big focus, but maybe it was overly focused as far as like making energy the big bad guy and only buying stocks that are pure ESG plays. So that is something to consider. So that's kind of the case for buying energy, continuing to buy it. So a few other things. It's predicted that even an increase from Iran with their reserves would not fulfill the supply deficit. And that means we're going to have to increase all across the board around the globe, including here in America. I want to show this snip to kind of show proof of what I'm saying. Even the Biden administration recently authorized the release of an unprecedented 1 million barrels per day from the United States Strategic Petroleum Reserve for the next 6 months. Basically, they said the scale of this release is unprecedented. The world has never had a release of oil reserves at this 1 million per day rate for this length of time. This record release will provide a historic amount of supply to serve as a bridge until the end of the year when domestic production ramps up. So again, domestic production is expected to ramp up, which is a bull thesis for continuing to buy energy stocks unless if it's already priced in. That's the bear kind of thesis. But even with this million barrels per day, keep in mind that's only 1% of daily global production. Only 1%. So it's unlikely to solve any kind of problems. And there's still a lot more to come as far as us trying to, as a global community, increase the oil supply. So I think that production will continue to increase over the next couple of years. I do agree with that. I do think Warren Buffett, is smart. I think he's taking advantage of this crisis. And that might sound harsh, but when you're making money, you have to look at all kinds of different things. And so this is one way to do that, right? It's just what millionaires and billionaires do and how they make money. They see opportunities, and he's doing that with this crisis, and that's the oil. So he sees it as it's still going to go higher and higher, and he'll make a lot of money, which he probably will. So how much is baked in already is the question. I don't know that answer, but I do still see upside potential, but I do think there's a decent amount already baked in. For the next couple years, we will have to see. But what I did with my FENY investment, that's an energy ETF that we just talked about, I decided to do the following. I sold half of it this morning, and I used those proceeds, which was about $600, to buy many different stocks. I did a video of what stocks I plan on buying in June, so I bought many of those stocks. Let's bring up my chart again. I'll kind of maybe show you what I bought off the top of my head. So let's see, I bought Amazon, I bought Meta, I bought Vixis, I bought T-Row, I didn't buy any real estate. I bought 3M. I think that's a great dividend play. I bought some SCHD. I did buy some FIDU, which is an industrials ETF. And I bought FHLC. I did buy a healthcare ETF because it's at its 52-week low. So I wanted to do that. And I think I even bought some Warner Bros. Discovery. So I went in and I bought a bunch of stocks. I kind of cleaned house with my profits from FENY. And I had some extra money too, so it wasn't just the 600. I had a little bit more in there to play with today. But days like this, I think, are great days to buy. I took advantage of that. I also, with energy stocks, I see both the bear and bullish case, so I thought, why not take half now? I'll wait a couple years. If it does go up, then I'll take another half then, right? That's kind of my strategy. That's what I'm planning on doing. Let me know what you think the energy sector will do in the stock market. Do you think it will continue to increase, or do you think this last couple years of pretty healthy growth has kind of hit its peak? I'd love to hear what you think. I'd also like to hear what you think about the big red day today in the stock market and my portfolio finally going in the red, which I'm okay with. I'm a long-term investor. I'm just gonna be buying more stocks on sale, which is what we should all be doing right now. So let me know what you plan on buying after the big downfall today, or what you did buy today. So with that said, guys, thank you so much for joining me today. Hope you have a great week, whenever you're watching this, and we'll see you next time on Mark Arnold's Finance.